Hey traders, TG Watkins here. It is March 10th when I'm recording this, and I wanted to talk about the S&P breaking the daily 200. That's going to be the big thing today. So I recorded a video yesterday doing the market review, talking about all this kind of stuff. I'm still looking for a bounce at some point. Broken clock is right twice a day, right? So at some point it's going to happen. We're still just kind of waiting for it. But what I wanted to show you guys is when I was looking at this and talking about how I'm looking for a bounce or something like that, here's an example of what that looks like. So if you come back here, you can look at, I'll call it, the October, September, August, October low. And what I was looking for was basically this situation. So price came down, got pretty extended, came into support, bounced, but then still rolled lower. That's essentially because I rewatched my video, especially now that we came down, broken below the daily 200. And I want to say, hey, all right, let's kind of put a finer point on this. What was it that we were looking for? And I kind of looked back and I was like, there's the example of what I was trying to spell out, was where price came down, bounce, gets rejected, goes lower, and then maybe we see if we can finally dig ourselves out of this hole. And if we look at where we are now, that did not happen. This market is just being absolutely hammered and sold into. I thought things were looking a little bit promising with the fact that we were kind of holding the daily 200 for 4 days. We even probed below it on Friday and then came back up, but that's just not the thing. So this morning, you can see we actually opened below the daily 200, so breaking the 200 with this morning situation, and then they just kind of walked it down all day. I was looking for a little bit of a bounce to see if anything can happen. Didn't work. And they just continued to walk it down. We did hit, was it 50? Where did we go down to 50, 55, 60? I mean, that's again, big number to the downside right there. And then they did manage to bounce it pretty hard right up to, the 5,600 area. And then we'll see. Now, if you remember, we're still also looking for a perhaps 10% correction. I mean, this is pretty crazy. The fact that we might hit a 10% correction without any major bounce first. That is pretty wild. The major hedge funds and institutions are really just selling this thing and just saying, we're not going to do anything. So now that we've broken the 200, the door is open to more downside. It was a little bit interesting to see that the major indices did have a lot of volume that came in the last hour of the day. Let me kind of show you guys what that looks like if I pull this up. So I mean, just across the board, you can look at even things like FNGA. This is the leveraged ETF of the FANG stocks. Look at that volume. Lots of volume out there. Now, I can't confirm that this means that the low is in or the bottom is in. This might be a component, some piece of the puzzle for what might be happening. Like if this is the low, that might be good. That might show that there's some capitulation. So we'll have to see. And then if you notice here, I was kind of watching this. It's like, wow, there are two really big bars on the hourly chart that kind of popped up here on the FNGA. So again, the leveraged ETF of the FANG stocks. This might mean something. It's too early to say, but just noting it. And then the other thing I was watching is that for the day, basically the FANG stock ETF double bottomed, even though the S&P rolled down even lower. So we might be seeing some divergences. This was kind of what that whole video that I was talking about. So if you guys come over to Profit Pilot on YouTube, make sure to hit the like button, all that kind of stuff. But if you watch this video, which we had quite a few people looking at it, that's what I'm trying to show is I'm looking for divergences and nothing has set up. We didn't take an S&P trade over the weekend. We didn't even take one. We just haven't been able to find one yet in through here. And if you look at FNGA, there's something, the NASDAQ, if you look here, I mean, look at the massive amount of volume that is coming here. It's the biggest one yet. I don't know if that means anything yet. Look at the hourly. That was the last hour of the day. Lots of volume coming in here. Again, I don't know if that means capitulation. I don't know if that means buying yet, but it is something that I'm paying attention to. You can even see the IWM. Big volume bar at the end of the day, not quite as big as some of the others. And on the daily chart, nothing too notable, but yeah, you can see volume has just been steadily increasing as it comes lower and lower. One thing to pay attention to on the IWM, again, it's a minor index. We'll see if this means anything, but it is on its weekly 200 and it's kind of past its monthly 50, but it's down there. I have also had this trend line in here for quite some time and we're still sitting on that trend line. So again, I keep saying I think we're close to something, but it needs to prove itself and we'll have to see if something like that shows up. Another thing that I was talking to the traders today in the Moxie room about was how do we trade something like this a little bit sometime in the future. So with the idea that volatility is high, so if you're going to be trading some options like that, if volatility is high, you don't really want to do long calls, because it's challenging that unless you can really figure out where this low is and nail it, you're going to be kind of going against some competing things. So if price continues, like if you're just trying to find an area where you think price is going to eventually turn and trying to just kind of position for that, you're probably going to have to average down as price continues to go down, because you're still searching for it, right? Because if you could find when it actually turns, you're not searching, you don't have to average down. But in the meantime, if you're like, well, I kind of want to be in because I know this thing's going to eventually snap back and I kind of think this is the right area, what kind of strategy do you do? If you just do long calls, you're probably going to have to go quite a ways out as far as time to make sure you have it. You don't want this thing to expire. You also don't want theta to be too much of an issue as far as eating into your the amount of money that you have on this thing. And then if you're looking for a bounce, a move, you need it to be a pretty healthy move to overcome not only the theta decay, but also the volatility collapse, okay? So the vol crush, basically. And so those are going to be a couple things that are kind of not working for you. Now, maybe an easier situation to work with is if you sold puts or if you sold a put credit spread. Depends on your margin and how much risk you want, but basically put credit spread is probably the better way to do it. Given how long this thing has been taking, you're probably going to want to look 68 days out. You can look even more. But the whole idea is that if you start kind of positioning this, and again, this is all hypothetical. We don't know exactly where the bottom is, just trying to talk about ideas for trade setups. But if you do kind of start, building in a position here and it does eventually turn around, let's just say if you started to put one on like right here and price went down like this, by the time it comes up here and even comes back to where you entered, you would most likely still be profitable, even though price is back to your entry point, because you got the vol crush, so that works in your favor. You've got theta decay, that works in your favor. And the fact that we've now bounced pretty hard whenever this thing ends, people are going to be not interested in puts. And so, the cost of them is just going to be going down. And so that would really help you out. It would be one of those things like if you started loading up here at the 200 thinking, okay, that's going to bounce. If you gave yourself enough time, you might have to handle some heat as it goes down. But again, if you come up here, and I'm just being hypothetical here, but if this took a couple weeks to turn around, you might only have to go back to this point in order for you to then actually be profitable on your put credit spreads. And so you don't have to actually get back to your entry point. Now, if you had calls and you started loading up here and maybe you loaded up here and then it kept going down like this, you're going to have to come back not only to your entry point, you're going to have to then get back above in order for those to work. Of course, you could maybe sell some calls against your long call, all that kind of thing gets a little bit complicated. Seems to me that probably selling some longer dated put credit spreads would be the better way to do, mostly because of how high the VIX is, and when this thing finally bottoms and turns around, the vol crush is going to work in your favor as opposed to against you if you went with some long calls. Okay, so just some ideas to see if you want to dabble with that and kind of figure some stuff out. Again, we have not been able to find the low yet. We broke the daily 200. We've gotten a lot of volume that's coming out there. Nothing's quite holding up. We should see when this thing finally turns around, because it's not going to be red like this, okay? On the day that we finally get a good turnaround, it's not going to be red, it's going to be green, okay? We're going to be seeing a lot of energy, a lot of that kind of stuff, and one of these days we'll be close to that, and it'll be fun when it finally catches and hooks. But remember, I'm still not totally confident that it'll be the low. It might be a low, and so I'm just going to be viewing it as a bounce. We'll see where it goes from there and keep taking this one step at a time. All right, guys, thanks again, and we'll see you at the next one. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.